You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. It is a dangerous world out there. Volatility is on the rise, and your clients' portfolios are under assault from a growing number of threats. Simple diversification is no longer enough to shield the assets under your protection. Registered investment advisors, financial planners, and asset managers need a new weapon in their war on risk. Welcome to the Advisor's Option, the program designed to arm busy advisors with the information necessary to properly manage risk in this volatile environment. From options education, trading strategies and tips, to industry news and interviews, you'll find it all on the Advisor's Option. The Advisor's Option is brought to you by the Options Industry Council. The OIC was created to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. For more information on how the OIC can help you implement options in your practice, please visit optionseducation.org. The Advisor's Option is also brought to you by Option Research and Technology Services. ORATS is your source for options backtesting. It's where you turn your ideas into results. Founded on the floor of the SIBO over 2 decades ago, ORATS is a full-service option research firm focused on helping you develop options strategies in line with your investment objectives. With a state-of-the-art backtesting platform, scanning, and implementation tools, ORATS offers end-to-end option strategy development, making the whole options trading process easier. For information about backtesting, scanning options data, including dividends and earnings, visit orats.com or email Matt Amberson at matt@orats.com. And now, it's time to learn how to implement options in your practice. It's time for the Advisor's Option.
Welcome back to our Options Insider conversations from the 2025 Options Industry Conference. Doing things a little bit different this time in the Southern studio because we're also doing double duty with a live special edition from the conference of our Advisor's Option program. And joining me hot from his panel duty and joining me to help break down all of the interesting stuff going on at the conference this year, my Advisor's Option partner in crime, good old Mr. Matt Amberson. Good to see you in the flesh, sir. How are things?
IRL, as the kids say. It's great to see you. It's been an amazing conference. I got to go on one of the first panels, which was great. I have a friend going on the last panel, which probably sucks for them. But amazing stuff going on. Great to be down here. Good to see you.
All right, then. Let's do it then. Let's get the buzz.
Busy financial advisors don't have time to follow the latest developments from the options market, so we do it for you. It's time to get the buzz.
All right, everyone, welcome to the buzz. We usually don't lead with the buzz, but it seems appropriate this week given that we are literally a buzz right now in the middle of all this flurry of activity down here. If you're not familiar, listeners, OIC is the Options Industry Conference, an annual gathering of all of the movers and shakers, I guess you can say, of the world of options, coming together to discuss and debate the myriad salient issues of the day. Matt, you guys kind of kicked things off on the first session. It was you. It was our good buddy, the Flow Master, Mr. Henry Schwartz, who will be in here tomorrow. It was Steve Sosnick, who's been on our network many times. So it was kind of like a Options Insider Radio Network reunion on the panel, which I was fun to see. But you guys had a great session. You kind of joined Henry. Henry does his annual State of the Industry session. But it's fun to have some more voices in there as well. A great session, a lot of surprises coming out of it. Give our listeners kind of a little bit of the lay of the land. What'd you guys talk about?
Ariane Adams, too, from Weeble was there. She's good. Yeah, Henry always does a great job. His first State of the Industry, when they asked him, he asked me for help, and he's gone way past that now. But when he came in and said, "Hey, we're adding people to this," I was very excited. And then he says, "Okay, here are the slides that we're going to talk about." 55 in a 45 minutes. I'm like,
that's Henry to a T. Yes. So whenever I do a 1 hour panel with him, he'll show up with like 45 pages of slides, and I'll say, "This is great, but how about 5?"
I go, "Henry, maybe 10."
Yeah.
20 came out, including one. He said, "Matt, I've added a slide. You're going to like it." And I'm like, "Oh, God, another slide." But he was right. It was a shocker. And he had it. So it was great. It was a great panel. We talked about everything from zero DTE to retail participation to all the new exchanges all over the place. I can't even count them. 20? What is it? 22?
Yeah, somewhere in that ballpark. Yeah.
And so we touched on everything. I don't know if anything's pertinent right now for you.
Well, the start of the end, because that one is just blowing up our Twitter. It surprised a lot of people. Everyone after that session kept coming up to me throughout the whole day at the conference saying, "Did you see Henry's last slide? Did you see Henry's last slide?" If you're listening on the audio side, listeners, we will also have all of the panel audio coming to you exclusively through our network, so you can hear it for yourselves. Unfortunately, you won't be able to see the slide. We did tweet it out, though, so if you follow us at Options, you can find it there, and that's gotten a lot of response. And in a nutshell, listeners, Henry crunched all the data year to date for executions in SPX, focusing exclusively on the 0-day liquidity, and he broke it down by time of day when these trades are going up. And most people can probably reasonably assume you're going to see nice spikes at the beginning and end of the day, and we did see that. So those are the two zeniths of the apex of the chart. And then what was more surprising to a lot of people, and I think to you as well, Matt, was the completely predictable and regular rhythm to the spikes of volume that were occurring throughout the rest of the day. It was literally every 15 to 30 minutes, listener. So on 1:15, big spike of volume. 1:30, big spike of volume. 2 p.m., big spike of volume. Like clockwork, almost as if the bots were programmed to execute exactly on the 15 and 30 minute and 1 hour intervals. It was as clear as day as you could possibly see from that chart. You seem on stage like you were pretty surprised by that as well.
Very surprised, and then very much a light went off in my head. I go, I can't believe that a lot of our, a lot of our back tests are based on time of day, right? And of course, you round it to 10 o'clock, 10:15. And so we'll tell our users, "Hey, this is a backtest based on this time or that time." My friend Troy over at Option Omega has the same thing. And, we're putting backtests together at those times. It doesn't mean you need to set your bot to go off at that exact minute. And my jaw just like dropped, and I go, "Oh no." And I think a lot of other people are going to be very shocked. And 30 people have come up to me saying, "Yeah, that was great. That was a great panel, but what was that last slide all about?" And I said, I mean, what's crazy to me is it's bots, and it's mostly hot protel, retail, and some smaller fund bots. I mean, that's how they trade. And so and you could see it looked like a smile, and the lower teeth, were coming out every 15 minutes. I don't know how to explain the chart any better than that, but it was spike, 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 and it was just inspiring to see, because that's a lot of volume that we're driving with these backtests and bots. So it's very cool.
I think you just said it. I think Otto has gone rogue. It's him buying every 15-minute intervals. You should go check your sheets right now. He might have some size positions on for you right now. But yeah, it was fascinating. I have a feeling there are some people who are going to be tweaking their bots and Algos after,
it's going to change some behavior. Yeah.
All of a sudden, 12:59 is going to become the hot execution time for every algo out there. But yes, listeners, if you wanted to see a predictable pattern of behavior in this 0 day, then check out that slide. Henry has been sharing that deck. Maybe we'll get the official slide. So I took a kind of surreptitious photo of it during the event. Didn't look as good, so maybe we'll get the official slide and put it out there so you folks can see it. So if you follow us over there at Options, we'll be able to put it out for you. If you're on the pro side, we'll send it out to you as well, because it is, I think, eye-opening to say the least. It's not often that a chart dominates the conversation at the conference, but that one certainly seems to have. Any other interesting takeaways for you from your panel, sir?
Yeah, definitely. I mean, we talked about the market makers, and this has been a big refrain of mine on this channel, talking about zero DTE in general and whether it's good, bad, indifferent for the industry and market. And down here, the great thing is you get to talk to everybody. I've been talking to a lot of market makers about my theories, and they all nod their heads, so it's great. So again, my theory is that traditionally, market makers have been short puts because everyone's buying it from them, and long calls because people are overriding their positions. Most people are long, and they're doing options around their position. So the market makers have the opposite position of what the longs are doing. So that's why they raise the price of puts, lower the price of calls based on that supply and demand. What happened with zero DTE is they got a lot more inventory of puts through these very wide iron condors that people are executing. And so they were able to buy inputs, and you could see it very well on our skew, our slope measurement, that it came down right at May 2022, right when the zero DTEs went every day. And people were able to trade them as a business, and that's when zero DTEs really took off, became the majority of option volume. And I think that's very good for the market because it flattens out the skew. When the market goes down, market makers don't have to continue to sell to protect their positions. They're flat, so it doesn't exacerbate a down move, and so that's generally good for the market. And having a flatter skew is more reasonable to hedgers, and so I think the zero DTE has been a very good thing. And I think that like I said, I've been talking to market makers, and they agree with that theory. But also this tariff business that's going on and the increased volatility has blown out some of these iron condor people, and you could see the slope going back. So market makers haven't been as able to protect themselves in this increased volatility.
Even if you're doing 1 or 2 standard deviations, crazy condors, you're still 150 handle swings in the S&P. You're going to hit all those strikes multiple times.
Yeah, and the other people here are the brokers, and I've heard stories about firms just going under because of these huge moves, and and we're having record signups at ORAS, and it's because you can't just do the same old iron condors and make a little bit of money. You have to be nimble, and you have to do some research and figure out when to get in, when to get out of certain positions, and that's really what ORAS is doing now. Our biggest selling tool is our signals that you could look at a back test and then understand when to get in and when to get out based on those signals. So you could have really saved yourself a lot of money using those.
You'll be happy to know I can corroborate your findings on the market makers. We had a few market making firms rotate through the studio this week as well, and we did obviously discuss the notion of 0 day and whether they are the proverbial gamma bombs, as we like to call them, or if they are actually useful in those scenarios as a hedging instrument. And all the market makers said the same thing you've kind of been hypothesizing for a while. They are useful. It's a source of inventory you didn't have before, especially on some of those wild days, earnings days, other things like that. You need to just take something off your books really quick, just even for a few hours. The 0 day does function in that capacity. So you are corroborated, sir. The market makers are, at least for right now, they're loving them.
Yeah, I got a lot of pushback, at the beginning when I said it's going to really help things and it's going to do it this way. But, as time has gone by, we've seen that. And I've talked to market makers and asked them, what's their biggest pain point? And just like you mentioned, if they're hedging for 30 minutes, you can't just have theta be 1 day theta. It has to be minute by minute theta, right? So that's, they're crunching that granularity of the Greeks down to now intraday, interminute Greeks, which I don't envy them, but that's what we had to do before. On during expirations, we had to kind of guess all that.
You
stuff,
just
right?
threw away your theta and gamma because they were useless. It was some infinite number that made no sense, and you kind of just flew by the seat of your pants, and you knew if you were net long or short units, and you went from there, and you could tell the guy next to you was long or short units because if he was popping tums like crazy and sweating and nothing else was happening and it was a normal day, you knew he was short a boatload. And if the guy on the other side wasn't, then he probably was long. And that's kind of how it used to work out. I will say, keep referring to them as gamma bombs because it just sounds fun, and we could maybe sell some T-shirts or gamma bombs. What do you say? I think it sounds like a plan.
You have more sayings than Sosnick did. He really came up with it. I think he had 4 or 5 in the panel.
No one can hang with me on the sayings and nicknames front. That is my domain. But you mentioned the 0 day. That's obviously a hot area of conversation down here at the conference. And for years, we've been coming down here, Matt, ever since the 0 DTE era kicked off. So what's that, 3 years now? And people say in our audience, we ask them, what do you want us to talk about? And they always say 0 day, but they also say, more than just the traditional SPX and SPY and all that stuff. They want their Teslas. They want their NVIDIAs. They want the hot Mag 7 names that they're trading in their portfolios every day. And year after year down here at the conference, whenever I put that question to the exchange folks and the broker folks, the answer is always, well, we don't know. There's contra exercise issues. The market makers want to keep that. Maybe we need to create a cash settled version of the contract and do it that way. And that causes, obviously, you don't have 2 chains. I mean, there's a lot of questions with that, or whether it should be just a limited pilot and you try it just with maybe the top names, the Mag 7 names. Well, thankfully, listeners, there is now a concrete proposal. Whether you like it or not, there is something in the offing now, and it is definitely the buzz of the conference. The folks at NASDAQ have put forward a proposal to effectively do the Mag 7 plus 1, the Mag 7 plus Broadcom, and that would be their effectively limited pilot of 8 names. If all the approvals go through, it should go into effect maybe at the end of this year, but probably Q1 of next year is a probably more realistic time frame. And there also is a little bit of a carve out there for earnings week because they know that's an obvious catalyst. But other than that, Matt, everything else is unchanged. Contra exercise still exists. They're still physically settled, so no other changes. So I'm curious, at first blush, what are your thoughts of this proposal? Do you like it? Do you wish they went some other way? What are your thoughts?
So I still feel that there are major problems, inequities with the way things are exercised after the market close. And that the easy way to do it would be to compress that. Now you can exercise up to 5:30. Well, that's just a random number. Why not do it 4:10 or 4:15? That would level the playing field, meaning retail doesn't have to sit there for an hour and a half afterwards. They don't do that. And so it's not a level playing field. That's an easy way to go. I was talking to someone else about this, and I said, this is going to be trouble. It's one thing to have monthlies expire, and now weeklies expire, but now dailies is going to be, you're looking for more problems. They saw a lot of problems on the Trump Liberation Day after the close. That's why a lot of people don't trade SPY 0 days, is because those could be exercised, and there are a lot of horror stories on those getting exercised without people knowing, retail mostly. And so, someone said, "Oh, well, it might be that they'll put it in, and then that'll be an impetus to fix it later." I wish they would fix it first. So before us, and I talked backstage in the green room to a commissioner from the SEC, Hester, and she said that during her talk, she said that if you guys bring product and put it in front of us, I want you to make sure that you're teaching and giving the proper tools for retail to utilize these things. And that's what you're doing here, Mark. And that's what I think that was one of her most insightful comments was, fine, do this innovation, but make sure you protect the retail. So this is a big innovation, and I hope they protect the retail by everyone's talking about it. Everyone has their own thing. I wish they would just compress the time that you could exercise.
That seems to be a consensus out there. I heard some conversations to that effect last night as well. If you're not familiar, listeners, after the close, most people think their options expire at the close. You actually have what's called the contra exercise window. I forgot the exact length, what it is right now. Yeah, 5:30. So market makers are obviously familiar with that because that is part of their bread and butter. That is part of their job. Your average 10-lot retail, maybe a lot of the ones listening to our network are. Maybe some of your clients, if they're savvier, are, but a lot of people aren't. And so what Matt's pointing out there being an unlevel playing field is effectively, as even some market makers were arguing last night, it's effectively a free show for the market makers for like an hour and a half that the retail doesn't get.
Free option.
And so what happens in that time, listeners, anything could happen in that time. If you have options and you think they expired and then something happens in that window in the after hours, the CEO steps down or something else happens, they pre-announce terrible earnings. And next thing you know, you think you're flat or your position is gone. And now you could come in, worst case scenario, maybe you're long a boatload of stock in a stock that just crashed 20% overnight or over the weekend. So people are concerned about retail coming up on the short end of the stick in those scenarios. And it only takes a few of those to be pretty bad for everyone. So that's the concern and why they went with SPX and a lot of the cash settled things first, because they don't have those concerns. It's just cash changing hands after the close. So it'll be interesting to see, Matt. So the audience for this show, the advisors, they'll be the vanguard for that. They'll get the hate from the clients if they do get run over. That said, I don't know how many of our audience on the advisor side, because it's very labor intensive, obviously, if you're writing covered calls to do it day in, day out. I mean, it's going to give them more choices from a liquidity profile during the week. That's a good thing. But it's a determined advisor who can be in there writing the covered calls day in, day out. That said, the premium's there if they want to harvest it, but they have to understand these things we're talking about.
Well, that brings us to another topic that we had is the automation out there. And that's when we saw that graph, that just shows you how much automation is being used. And I think advisors, that's going to be the next big step for advisors, is automating some of this stuff responsibly. And there's a lot better automation tools out there where you can do this. So which brings me to another topic, is the stop loss. I think that they could. I think we're going to see some work. I haven't heard anything, but this is my very early theory that stop losses will be improved, and you could even buy a stop loss. I think.
Really?
Yeah, that's what I think is going to happen. You can't do it now. I'm just theorizing. So you heard it here first, Mark. In 3 to 5 years, you'll be able to buy a stop loss that no matter if the market closes and opens 1,000 points down, you're stopped out. It's just an option, right?
Yeah.
So I think you're going to see that, and I think it's going to be popular too.
You think AI will improve the execution side of it enough where they can make the stop loss avoid that gap risk, you think?
No, I think it has to be a contractual thing.
Oh, so you think there's literally going to be an option on a stop?
Yeah. If I were an exchange, I would start thinking very much about that, because that really would grow the market, I think, because a lot of these back tests that we do, there are implicit stop losses, and we know how stop losses could be. You could get just run over. I mean, and it's difficult to put it in there, but there are some rules that you could have to make an orderly stop loss that you could sell to someone, which I think would be phenomenal for risk management.
You could argue at that point, if you have the 0-day options, that could all function in that regard as well. If you have a position, let's say equity, and you want to just stop yourself out for that one short period, you could obviously have the put. And as long as you're willing to pay the premium, you could do it that way as well. But you're right, there is an implied optionality in something like a stop loss order, and also a lot of gap risk, which is why they can be spooky for some folks. That would be interesting to see if they start actually optionizing and indeed monetizing order types. It's not something we've seen before. Don't give the exchanges ideas, Matt. That they're looking to sell us things. Maybe Otto can provide that function. I think Otto can he backstop the entire options industry?
No, AI is not our savior, but responsible rules and products can really help the landscape, really help investors, and I think that would be a great one.
Well, you have an advantage on me this week because I've been in here. I've been having my own, mini conference. So I know the lay of the land, what people have been talking about in here, but I haven't, outside of your panel, I haven't had a chance to check in on the session. So any other sessions really are resonating to you and they'd be interesting to our audience?
Yeah, there are some really cool ones coming up too. But like I said, I listened to the SEC one. Of course, Matt Cashman, I think, is doing a great job with getting panels on there. Just getting Henry off the stage alone and having fewer slides, it was a huge benefit.
I think some of the exchanges bristled. Not that he's a SIBO guy too, and he was great when he was on his own at Trade Alert.
Right.
He's still the same great guy, but obviously being affiliated with SIBO, he would tell me people would give him a hard time. Like he would put up the slide of market share, and maybe he would round to a tenth of a decimal point, and they would get mad at him saying, "You took away you rounded me down. How dare you?" So there was a lot of that going on, which I think you guys were a little bit of a buffer for him in that perspective.
All right, I didn't think about that, but that's pretty funny. I mean, but he's obviously we love Henry, but that's a funny comment.
People get very heated with their market share.
Yeah.
When it comes to all that fun. So you said there's some panels coming up today that you're interested in. Which ones are those?
Yeah, you got the education one.
Okay.
I think that'll be good for us to look at, obviously what you're doing and what, I try to put 10 to 25% of my time into blogging, education, and it'll be interesting to hear what's going on there.
That's been a big discussion point for us here this week. You remember Alex Jacobson. He passed away this weekend. A long time educator in the space. I first met him when he was the educator on staff over there at ISE before he became a big part of our network and was a regular on the option block. Beloved as the viceroy to a lot of our listeners. Whenever I see an option trading on a stock below $10, I always think of him because he would always bristle at that notion of trading any option on a stock below $10. So yeah, he did. We found out during our show this week, so it was a gut punch to all of us. Unfortunately, I believe his services are actually today. So the entire options industry is down here while he's having his services are going on. So that's a bit of a shame. But he was a big, obviously, proponent for options education. So we've kind of been taking the lay of the land of everybody who comes through here this week and just saying, what are their thoughts on A, the state of options education, and B, what do you think we could do to improve it? So I will put the same question to you, sir. First off, what are your thoughts on the lay of the land of options education right now? And then B, what do you think we can do to make it better?
Well, firstly, it's a shock to me that about Alex. I saw something on Elite Trader. Hey, where's Alex? He's usually quite active.
He liked hanging out there, yeah.
And so I just want to give him my best to his family. That's a shame. What a nice guy. Terrible loss for the option industry there. But as far as education, I think more shows like this. I think that what the SEC chairman said is very correct. When exchanges are putting product out, they have to put as much effort into education and tools for implementing these for retail as they do coming up with these innovations. And so, it's not just what can we do to make money, but it's what can we do to grow the whole industry, and not just what could we do to make money more for our exchange, but what could we do to solidify options and get more people using options. And everyone should think about 10% of their time to option education, getting out there on the socials and doing some things to reach down and bring others along, share your knowledge, and get things out there, because it really does grow the entire industry. And I think that's one of the reasons for growth.
And clearly we need it probably now more than ever. I mean, the numbers for April up nearly 25% year over year. So a lot of new players coming in just last month. And then, of course, on top of it, we're talking about these issues like the after hours contra exercise. The need for education, you could argue, has never been greater, especially when we're seeing intraday swings in the S&P of 100 plus handles or greater. Definitely a time for education. We've had a lot of the exchanges and brokers in here this week. It does seem like, for the most part, one of the things I think Alex would probably be upset about, if I know he probably was just the way that the exchanges have kind of abdicated that to the brokers now. The brokers are the de facto educators in the space. That makes sense. The brokers have skin in the game. The brokers should be out there educating, but I don't like it that the exchanges have kind of washed their hands of that. I had NASDAQ in here earlier this week. They own 6 options exchange. They own 6. Not a single educator on staff at NASDAQ. And when I asked them about that, they said they don't have any plans to really change that. I think the exchanges view OIC. That's a great group of people, but they're limited. It's only a handful of people. They can't do the educational lift for the entire industry yet. They're expected to do that. So I would like to see if you spin up a new exchange, maybe a minimal requirement. You have to have someone on staff who is in some sort of educational capacity that could help carry that torch. There used to be a time ISC had educators. Alex was one of them. SIBO is now the last of the exchanges that has any sort of educators on staff at their Options Institute. And even that's, a pale shadow of what it used to be. So that's a trend that I haven't really liked to see. As volume's gone up and the education has gone down, Matt.
And one of the big points that I had on stage that I hadn't heard others talk about really is one of the reasons for all this growth is just the friendliness of people, of our culture now towards finance. People don't remember the 80s or the 70s when you wouldn't say that you're in finance because you were the bad guy. You were the bad finance guy. And even through 2007, derivatives are dangerous. It's not just educating on specific tools, it's growing the society's acceptance of what we do. That's why we're growing right now, because we're actually respected. and I've been around when we weren't.
Yeah, options are not. Yeah, you're right. They're not the euphemism for some sort of horrible thing. You don't hear options only mentioned, when there's a long-term capital or an Orange County or a Barings the way they used to be. They were only associated with risk additive, very negative events. And you're right. These days, you've got young kids debating it on Reddit forums about, what the best strategies are for zero day. And it's a joke someone said on my network a couple of years ago, but it applies even more now, is that we wanted a lot of people to trade options. We just didn't know they were all coming at once. And they're all here now, Matt.
Yeah. And you really got to, this is a very special time, and you need to not blow out people. You need to not do dangerous things. You need to be very responsible for this time. And it's super important. And that's one of the reasons that we're seeing this growth. And we have to protect that. And I don't think a lot of people appreciate it as much as they should.
Talking to some of the exchange folks this week, and they pointed out something that I've been noticing as well, that unlike you said something earlier, and I haven't heard a lot of, usually when you see these vol shocks in the system, you see one or two market making firms go by the wayside. You see a big blow up here or there. You see a big fund that was only selling premium inappropriately. They blow out. That seemingly is inevitable whenever we have these big vol shocks. We haven't really seen that this time. So we were kind of speculating as to why that might be. You sound like you said you heard about some firms.
Yeah, I mean, talk to some of the brokers, especially the retail brokers that are backstopping some of, substantial sized funds and retail funds. And they're, if you talk to them, I've talked to them, they lost a few.
Really?
And I could see it in the skew. I could see it. There are fewer traders. As a matter of fact, some of the market makers said that too. They were much more gun shy now after that move.
Well, yeah.
So, whether they blew out or just took their foot off the gas, it lost a lot of traders there.
I have talked to a few brokers who said that they have people like doing exactly what you're talking about. They were concentrated in writing 0 day out of the money premium. And most of them are kind of just taking the ball and gone home for a little bit. VIX is below 30 again, but it was above 30 again for a little while. And those kind of markets, it's easy to get run over. But they think those people have not gone, just kind of, again, a little bit of a pause.
Yeah, I mean, they got stung, right? They're going to go away for a while. And, we've been talking on this show forever about, watch your risk, your risk, never be short units, watch your risk. And, it's not the most popular refrain, but when something like this happens, they wish they would, I'm sure.
Speaking of, these volume numbers, we should get out of here on this just because it's, as you mentioned, it's been a popular refrain we've been talking about on this show since its inception almost. And certainly the last few years post-COVID, it has become the talk of the town, which is the volume growth. I alluded to it earlier, Matt, but the numbers are in for April. And to call it a banger is underselling it. Overall volume up 24.3%. Index options up 11.5%, and that's kind of the sleeper of the bunch. Equity options up 23.2%. ETF options up 28.8%. Oddly enough, the only real dark spot on the whole chart are VIX futures, down 4.7%. So even in a market where we're whipsawing 100-plus handles in the S&P, VIX futures can't catch a bid. So that was kind of surprising. But in general, just an explosive outlier of a month, obviously with the caveat that there was a global trade war. So that's probably going to happen. But in general, Matt, what are your thoughts on these numbers and the fact that this volume explosion that you and I were both skeptical of early on clearly is rolling on, sir?
Well, that big day did some crazy number. I don't even know what it is, but like if we had that number for just the one day, it was just off the charts. And so, this all has to do with several points. One is what I mentioned before, just the culture in general around options. So we're it's somewhat cool to come to the market. Automation is a huge part of it. Liquidity, market makers are doing a good job. AI is helping. It's easier to program now. There's more education out there. Shops like mine selling better data to it levels the playing field a little bit. Those are all factors in improving these volume figures that are frankly off the charts, and of course the volatility, and even the market going up. There's cash sloshing around, and people are trading. So that's what I think.
Well, Matt, I appreciate you joining me for this special live from OIC 2025 edition of the Advisor's Option. Before we roll out of here, if there's anything else that's catching your eye at the conference you want to share with the folks, or maybe any other interesting trends or developments you're seeing in the market you want to discuss with them, now is the time, sir.
Yeah, well, first of all, it's great to see you at IRL, and great to be at the conference. It was awesome to be on the panel. Everyone came up and said hi. My joke didn't do too well, or my self-deprecating humor, but ORATS is just cruising along. So if you want to test strategies and do some back testing and not trade on the hours or every 15 minutes, come on over to orats.com, Mark.
That should be your tagline. Don't be the algos. Come with us. ORATS. We'll show you a better way. Check them out over there, orats.com, ORATS.com, the place to go to kick the tires and light the fires. That's going to do it for us for this live from OIC edition of the Advisor's Option. Not going to do it for us, though, for our content from the conference. You've already seen some of it hitting the network. If you're on the pro side, you'll get all that content early. There's more of our usual shows coming up tomorrow. We'll be joined by our good buddy, the Flow Master, on the option block, as well as, of course, later on by This Week in Futures Options. So all that will be hitting the network. And then, of course, we've had the studio running almost 24/7 since we got down here. So a lot of great people coming through the studio. We'll put that out to you, as well as added bonus. You get all of the panels from OIC coming to the network as well. So if you missed OIC for whatever reason, maybe you're just curious, but you don't want to pay the ticket and the bill to come down, don't worry, we've got you covered from every angle at OIC this year. And then we'll see you back here the next episode of the Advisor's Option. Stay safe out there, everybody.
Advisor's Option is brought to you by the Options Industry Council. The OIC was created to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. For more information on how the OIC can help you implement options in your practice, please visit optionseducation.org. The Advisor's Option is also brought to you by Option Research and Technology Services. ORATS is your source for options backtesting. It's where you turn your ideas into results. Founded on the floor of the SIBO over 2 decades ago, ORATS is a full-service option research firm focused on helping you develop options strategies in line with your investment objectives. With a state-of-the-art backtesting platform, scanning, and implementation tools, ORATS offers end-to-end option strategy development, making the whole options trading process easier. For information about backtesting, scanning options data, including dividends and earnings, visit orats.com or email Matt Amberson at matt@orats.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.